Over the years of building this business credit education platform, I have personally witnessed almost every single mistake a business owner can make while trying to build their commercial credit profile. And in this video, I am going to walk you through the first 4 of them in detail. Exactly what caused each mistake, exactly what it cost the business owner in lost time and suppressed approvals, and exactly how to fix it if you find yourself in the same situation right now. This is not a theoretical list of things to avoid that I am compiling for the sake of having content to share. Every single mistake in this video comes from a real business owner who came to me after the damage was already done, looking for a way to recover from a situation that felt confusing and discouraging at the time, often after months of effort that seemed to be producing nothing visible at all on their NAV business dashboard, despite their best efforts. This is part 1 of a 2-part series. In this video, I am covering the 4 mistakes that typically happen earliest in a business's building journey. Foundation mistakes that show up before most business owners even realize they are mistakes. In part 2, I cover the 4 mistakes that tend to show up later, once a business has already built real momentum. If you watch this entire video and recognize even one of these mistakes in your own business right now, you will know exactly how to fix it before it costs you any more time than it already has. And if you are just getting started and have not made any of these mistakes yet, this video becomes your prevention checklist for the earliest phase of building. Let's start at the very beginning of the building journey, with the mistake that happens before a business even applies to its first vendor. Mistake number 1 is filing your LLC too late relative to when you actually started operating the business in practice on the ground. I worked with a business owner who got denied at HD Supply despite a Paydex score of 72. Which should have been more than sufficient for that vendor's stated threshold of 70. When I pulled their full bureau profile, the issue was immediately clear. Their business had been operating for 14 months, but their Secretary of State filing date was only 8 months prior to our conversation. They had run the business as an informal sole proprietorship for 6 months before formally registering the LLC. And HD Supply requires 12 months of verified business age based specifically on the Secretary of State filing date, not the date operations actually began in practice on the ground floor of the business itself. They were 4 months short, and there was no way to recover those 4 months after the fact, no matter how strong their other metrics looked on paper at the time of application. The fix is simple but unforgiving in its timing. File your LLC with the Secretary of State on day 1 of operating, not when it feels official or convenient to make the paperwork formal weeks or months later down the road once revenue starts coming in. Mistake number 2 is NAP inconsistency, specifically a mismatched phone number across your 7 verification sources that goes unnoticed for months at a time. A different business owner came to me after 8 months of building with a clean Paydex score of 74 and 0 Tier 2 approvals, despite repeated applications to multiple qualified vendors over that period of consistent effort. Their NAP audit revealed that their DUNS registration had their old personal cell phone number, while their 411 directory listing correctly showed their new dedicated Google Voice number they had switched to months earlier, without updating everywhere consistently across every source. The mismatch between these 2 specific sources triggered an unverifiable entity flag on every single application for 8 straight months, without them ever knowing why their otherwise solid profile kept getting rejected by vendor after vendor, despite a strong Paydex score. The fix is to audit your phone number specifically across all 7 NAP sources immediately after every DUNS, or contact information update. Mistake number 3 is getting approved for vendor accounts and never actually using them after the approval comes through the system successfully. A business owner reached out to me in month 4 with 9 approved Tier 1 vendor accounts and a Paydex score that was still sitting at exactly 0, despite all those approvals sitting in their account list completely untouched. When I asked how many of those 9 accounts had an actual purchase made on them, the answer was 2 out of the 9 total accounts they had been approved for. Vendors only report payment history when there is account activity generating an invoice that then gets paid on time by the business owner involved. 7 approved accounts sitting completely idle were contributing nothing whatsoever to their commercial credit profile, regardless of how many approvals they had accumulated on paper or how encouraged they felt seeing those approval emails arrive. The fix is to make a purchase on every single approved account within 30 days of approval, even if it is a $20 purchase on something minor, because the approval itself is only permission, and the purchase is what actually starts the reporting clock running for that specific account going forward into the future. Mistake number 4 is using a P.O. box instead of a real commercial street address on your bureau registrations and applications across every single platform you use. A business owner came to me with a Paydex score of 77 and consistent denials at every Tier 3 vendor, despite an otherwise clean payment history everywhere else in their commercial profile that they could point to with confidence. Their business address turned out to be an actual United States Postal Service P.O. box rather than a UPS store mailbox. And while these two address types look nearly identical to a human reading them on a form quickly without much careful thought, bureau verification algorithms treat them completely differently during automated review processes that happen behind the scenes before a human ever sees the application. A P.O. box signals no verified physical commercial presence, and Tier 3 vendors specifically require a real commercial street address before they will extend any credit at all to a new applicant, regardless of how strong their Paydex score happens to be at the time. The fix is to switch to a UPS store mailbox immediately, which typically costs $20 to $30 per month and passes every commercial address verification check that a P.O. box automatically fails. Now that you have seen the first 4 of these 8 mistakes laid out in complete detail, here is the single most important takeaway from this part of the series. Every one of these foundation mistakes is completely preventable with a careful setup process in your first 30 days of building, before you submit a single vendor application. If you recognize your business in any of these 4 mistakes right now, the fix is the same regardless of which one applies to you. Stop and audit your foundation immediately. Fix every issue you find, and only then resume building forward with confidence that your foundation is solid underneath you. File your LLC on day 1 of operating, not when it feels convenient. Audit your NAP consistency across all 7 sources with special attention to your phone number specifically. Make a purchase on every approved account within 30 days, no minute exceptions. And use a real commercial street address from the very beginning, never a P.O. box. In part 2 of this series, I am covering the 4 mistakes that tend to show up later in the building journey, once momentum has already started. A missed invoice during travel, application clustering, using your SSN instead of your EIN, and letting approved accounts go inactive after the fact. Watch that video next on this channel to make sure your business is protected at every single stage of the process, not just the foundation. Download my free business fundability checklist at fundabilityhq.com/free-checklist, which includes a complete audit checklist covering every mistake in this series. Hit that like button, subscribe for weekly business credit content, and drop a comment below telling me which of these 4 mistakes you recognized in your own journey. I read every comment and I will personally reply. I am Lindsey Shreeve from FundabilityHQ. Build business credit with no personal guarantee.